Good morning, everyone, and welcome to another episode of the Crypto Hour. Today is Friday, the 8th of August, and um, we have some kind of like interesting news this week. We are probably arranging, so I will tell you in a second. Just trying to see if Jonathan can make it today. I know that he was just coming back from holiday, so I'm not quite sure if he can make it today. But during the week, we have the announcement that the midnight glacier drop is now live. Okay, so we'll go and talk a little bit about that. And when Jonathan is available, it's probably going to be next week. It's going to be a live demonstration. So how to go and claim your free tokens. Oh, there we are. That's Jonathan. Yay, yay. You can see that his ears will probably be burning. Okay, Jonathan, how are you? Just like show yourself. Show yourself. We were just talking about you, and kind of like we were talking about the live midnight glacier drop.
Yeah, we are live.
So kind of like big news. I don't know if you, I know that you were on holiday this week, so you just got back and everything. So I don't know if you happy to kind of do a demo today, or would you want to leave it for next week?
I could try. I don't know if I've got any wallets that are eligible for claiming here. Um, and if
Let's start talking a little bit about it. So
yeah,
first, okay, and then we'll see, and then maybe we'll have a proper demo next week. I can show people how to, because I think there's still. I tried doing my claim yesterday, and I've got my Eternal connected to Ledger, and it just didn't like it. Didn't like it. So I'm sure they still got some glitches that they are going through. But
yes.
so first of all, let's list who's going to get this free drop. Obviously, the 50% are dedicated to Cardano holders, and the so this is it's not just you can buy Cardano today and just get a free drop. Unfortunately, that the you should have had Cardano in your own wallet on the 11th of June when the snapshot was taken. So that 50% will go to Cardano holders, 30% to Bitcoin holders, if I'm not wrong, and then the other 20% to six other blockchains, which is like BNB, XRP, Solana, Avalanche. Well, so am I missing?
Brave,
Brave,
um,
yeah,
Ethereum.
and
Is it
Ethereum, yeah,
Ethereum?
obviously.
Yeah,
So,
yeah.
and that's how it's going to be distributed. So if you have any of these tokens on your own, yeah, unfortunately, it doesn't work if you've got them on an exchange. So they on the 11th of June, you must have had them on your own wallet. Okay, so if you have those tokens in a wallet on the 11th of June, then you will be entitled to a free airdrop. And but first of all, what is Midnight, and what does it do? What's this? I was talking. I was just before you turned up. I was saying how revolutionary it can be, because he will get these all these blockchains that we mentioned to, for the first time, interact in a easy way. So how does it do that? Yeah, there you are. Yes. Come on, I'll put you on the spot.
Yeah. Yeah. So yeah, it's a fascinating startup to a new chain. Basically, we're sort of entering the fourth generation of blockchains, really. That's how I'm seeing it. Because we've had Bitcoin, which of course was a great store of value, and but there's not a lot you can do with your Bitcoin once you've got hold of it. Then we had Ethereum, and you can get involved in smart contracts, in loans, lending, borrowing, exchanges, perpetuals, and all these financial instruments that you can play with. And then we had the third generation, which were Polkadot and Cardano and Solana, and they sort of introduced various. So Solana is very good at speed, Cardano is very good at security, and Polkadot's very good at interoperability and building out other um, solutions. And all of those chains have one flaw in the eyes of people who are running businesses, in that they're all impeccable databases, but they are all publicly readable. So anybody can go in and see whatever's been transacted anytime. And that's, one of the beauties of blockchain. For auditability, traceability, all the rest of it. But really what we want is something that we can pay our staff in, we can book hotels in without everybody knowing who we're paying, how much they're paying, or what hotel we're staying at for our holidays, because that's information that should be private. You don't want headhunters coming in and stealing your stuff away from underneath you, and you don't want stalkers finding you on holiday. So what we instead need is this midnight network, essentially, which is obfuscating, hiding the source and destination of transactions, so that you can maintain a layer of privacy over your transactions. And then you can do selective disclosure as to who needs to see those transactions, when and where, and for how long, for example. And so Midnight adds all these sort of upgrades to the transaction layer for anybody and everybody to use. And their specific intention is to go out and interoperate with all the other blockchains. So it can be an upgrade to Bitcoin, it can be an upgrade to Ethereum and Solana and Cardano. But essentially the proof and trust and security of the network is based on the back of Cardano, which has got an extremely strong foundation for those angles of the blockchain. And so Midnight gives us this opportunity to start afresh with a new ecosystem that interoperates between all our different environments and gives us those additional new features that are lacking at the moment. So it's really a very good tool for adopting mass industry on board, which is where it's exciting.
Well, in a way, kind of Cardano is kind of exporting its security to make it available to all these other blockchains. But what's the kind of the other one of the attractions as well is that kind of people can participate. Like for example, for Bitcoin, it's easy to see the attraction because there isn't much you can do on Bitcoin. So you could potentially use Bitcoin on Cardano to access DeFi sector, because obviously people that hold Bitcoin, they just hold Bitcoin. They don't do anything with it. They can do a little bit maybe on lending and borrowing, but pretty much that is it. So that now the kind of the attraction is that they can then participate on Cardano DeFi without compromising their token, because obviously Bitcoin maxes, they only know Bitcoin, so they don't need to part with their Bitcoin and send them to a smart contract or something to participate in DeFi. And they can also pay for fees in Bitcoin itself, although the products they're accessing is on the Cardano network. So that's the kind of like one of the beauties of it. And there's an incentive as well, so for people on different blockchains, although it is being validated into from a Cardano side, but there's also the validators from the other blockchains get rewarded if they process transactions. So it's that's the part of the attractiveness is then it allows people to use apps that belong to a different blockchain, but still paying with their own tokens, because everybody thinks that their blockchain is the best, but anybody, so then from not just from Bitcoin but from the blockchain can use Cardano apps without leaving their own what they're comfortable with, and pay with their favorite token.
Okay.
Exactly, yeah. And the sort of the layer that lets you use your own tokens from whichever chain you are is another innovation. And so even though you're adopting the sort of the security layer of Cardano to run the verification that the transactions are completed successfully, you're getting all the benefits of not having to have multiple wallets and interact with other blockchains per se unless you want to. So yeah, really powerful. I think the only thing was that when you were talking about the allocation, 20% is going to Bitcoin holders and 30% to the rest of those chains. But yeah, 50% to Cardano.
Thank you. And so the way it works also, that from obviously it's early days. I've listened to some, to some podcasts and stuff like that about midnight, but still kind of haven't really gone deep into it. But the fact that it's also interesting is that a lot of the transactions are pretty much going to be free in a way, because by holding night, the night token that generates the dust token that you used to pay for. You used to pay for the fee, so you don't spend the night token to participate in the apps, but you spend dust that is generated, keeps being generated as long as you hold those night tokens. So
Okay.
it's
Yeah.
it takes away a lot of the kind of like what we see in that, like sometimes the expensive blockchains that we see in the transactions on Ethereum that can go to hundreds of dollars, when the blockchain is busy. So it takes that layer away as well. That problem is another huge problem in blockchain, or sometimes, for networks like Solana, that they are growing to levels that are kind of like almost like unmanageable. It takes away. It kind of like solves a problem for them as well.
Plus,
It really does. It's
plus,
one of the major innovations that kind of caught me unawares was the two token makeup of Midnight. It was, I didn't understand it for a good time, but the fact that you have two tokens, one of them does your gas fees, like on Ethereum, pays for your transaction, you use it to pay in transactions, and then one of them is the sort of governance and utility token of the blockchain. And you have to hold the utility token to earn dust. But dust doesn't hang around in your wallet. It's ephemeral. It'll slowly wear out. So if you need to pay for transaction fees, you need to hold the night token, which makes the night token attractive still. But if you are not interested in holding night or dust, you can be on the Bitcoin network, stay in Bitcoin, and you will just pay someone transaction fees to use their night or use their dust directly to pay for your transactions. And yeah, just a genius model all around. Solves the problem. Because if you're interested in the Midnight Network long term, you can buy and hold their tokens. Well, you can't buy them at the moment. You can just give them for free. You can hold on to those night tokens, and you will have an asset being generated, the dust tokens, perpetually while you're holding night,
nice.
that you can use, or you can give your over creation to other people to use. So really clever model.
What I really like, kind of one of for me, the more usable features of Midnight is like the selective disclosure, because you don't realize that without thinking about it, you don't realize how much information we're giving away for free. Kind of like if you go into a store and you're young enough to to have to demonstrate that you're over 18 or 21 because you want to buy, let's say, a bottle of alcohol, for example. What are your options, generally speaking? You show somebody your passport, or you show them your driving license. There's a lot of information on there that the shopkeeper doesn't need to know. So that's the way. Or if you sign up for you sign up for a broker, for example, you need to go through KYC, and again, what does the broker need to satisfy the authority that you have certain characteristics? They don't need to see your utility bill or your bank statement or your passport or something like that. They just need to know that you are, that you are citizens of a certain country, that you're a resident in a certain place. And if you can disclose just that information without disclosing all the rest that is irrelevant to them, it would add a lot to your security. And it takes also a lot of weight from the people. They have to manage that information, because once the information is stored somewhere, they can be hacked sooner or later. So it does add big layer of security by not having that information laying around, for somebody to steal it. So it's a kind of like this is one of the day-to-day living, I think, implementation, if this technology is used, that can affect us all in a positive way.
Yeah. And it was the sort of realization as well that the
dust because it dissipates.
Yeah, he worked a big week.
Source and destination. And
So
that's the bit that then um,
sorry, you're a bit
and then
yeah, you're slightly frozen, John.
oh, am I my network not good? Yeah, maybe I'll jump back
You're
to the
okay.
phone.
You're okay now. You're okay now.
Okay, yeah, so security, that selective disclosure is made possible by the dust token because the metadata on the transaction is the dust token and that
No, sorry, not working. Not working, unfortunately. You sound like a Dalek. Okay, maybe Jonathan, maybe you can try to switch off your camera, then you probably your audio will come through more clearly. One question I had is that because I haven't had time to look into it, so the claim is open now, but when are the tokens going to start being distributed? Do you know the time frame?
yeah, so we've got a bit of a time to wait before the tokens are actually in our wallets, as it were. We've got two phases before the distribution of the actual tokens. So at the moment, we're in this 60-day period where you can claim your tokens, your free night tokens, if you are on the Bitcoin, Ethereum, Brave, Solana blockchains, etc., Avalanche and Ripple. If you held more than $100 of those tokens in your wallet on the 11th of June. So you can go and grab those tokens and you've got 60 days to do it. There's no rush. You don't have to launch into the process now. You've got time. Find all your wallets, resurrect the old seed phrases, check if your Bitcoin wallet from decade ago is still functional and lets you claim. And then you go to the website, sign a message on the blockchain of your choice, and that will be your claim certificate effectively that, yeah, I'm eligible to claim, I want to claim those tokens. And then we go into a second phase, which is a scavenger phase, which is 30 days long. And in that scavenger phase, all the tokens that don't get claimed can, or not all of them, but a bulk of the tokens that don't get claimed in that first phase, the first 60 days, then go into a scavenge where you can run a bit of software and try your luck at getting some of those unclaimed midnight tokens. And so that gives everybody then an opportunity to go in and try and get some night tokens for free as well. And then there is after that, so the 60 days initially, then 30 days. After that closes down, then the tokens will be generated and you'll be able to go and get those tokens actually into your wallet themselves. And even if you were eligible for the token in the first phase, this phase now, and don't get around to doing it, or your seed phrase is buried on a hard drive which is under the cancel tip, you got time to dig it up. And if you don't manage to do it before the 60 days and 30 days are up, then you can claim a small portion of what you would be allocated indefinitely. So there is always going to be an option to get hold of some night tokens if you can get your stuff together again. So yeah, we've got effectively us who are claiming now, we've got 90 days to wait before we can actually get those tokens in our wallets. But yeah, I think it's the fairest way of getting the message out to everybody on all these different blockchains, because there's a whole load of people who will have no clue about Cardano, let alone Midnight, that can take advantage of this. So it's a really fair, inclusive way of getting this distributed out, and it also happens to be the largest ever blockchain event ever. So there's something like 37 million wallets have been allocated and chosen as eligible for this claim, and so you need at least 60 days for 37 million wallets to arrive at a website and sign a message claiming their tokens. Pretty mammoth.
Yeah, fantastic. And it's there's what's the amount is it going to be a fixed amount of tokens? I think it's about what 24 billion, something like that, around that
Yeah,
number.
similar to Bitcoin. Locked cap supply of 24 billion, and the distribution, those tokens are all being distributed with this Glacier drop. Effectively, they'll be the only way to get those tokens will be on secondary markets after this phase.
Yeah, so kind of like we're not talking, obviously it's not the kind of thing, so this is not a product that is supported by investors,
VCs or
VCs and so on. So it's kind of a completely free drop to holders of this token, which is we obviously some of the people that receive Midnight tokens are big holders of Bitcoin, big holders of the other things. So some of the big holders will receive a lot on Night as well. But at the same time, there is no vested interest behind it from one particular group of people to, let's say, push the price up and then sell, because the tokens are available for everybody. And so if you think about it, what's the kind of expectation? Maybe, I know that Charles Hoskinson, which is the founder of Cardano, was talking, that probably within a couple of years we should be in the double figures in terms of billions of value. So talking about for the tokens to be within, $0 and $1, somewhere in between, whatever then depends on, how well it's received and, how many transactions it generates and all these things. But so when you're thinking about this 24 billion tokens, if it was like $1 each, then it would have a market cap of 24 billion. 10 billion is maybe kind of like a genuine possible expectation, and that would mean a price between 40 and 50 cents per token. So if you received a few thousand of these tokens, I think you would be pretty pleased anyway to receive for free. It would be a nice present to receive for just having Cardano, having Bitcoin, or having BNB, or all the other Ethereum, or all the other tokens connected to it. So anybody has any specific questions about this, or shall we move on to something else? Maybe Jonathan, shall we try then doing a proper demo next week?
Yeah. To be able to get something set up for next week, that'd be good.
Fantastic.
Yeah, and that'll give a because there's a few hiccups being spotted in this first distribution as well. So like you were saying about Ledger and Eternal Wallet, that is an issue. If you want 100% smooth way to do it, then you can use the Lace wallet with Ledger hardware wallets now, and that's that definitely is working. There was a fix released.
I'll try. I've got the Lace wallet. I need to try. I tried it last night, but I think, I was too tired. I think I can't be bothered to spend 2 hours on trying to claim this token. I'll do another day. But yeah, I'll try with Lace. Thank you. I got that anyway. Eric, you had a question?
Yeah, I have a Ledger wallet, and I have different coins on the Ledger wallet. Do I have to claim each individually, or can I just connect the Ledger wallet and they will drop for all the different coins?
There are different claims. Yeah, there are different claims.
Yeah, per blockchain, basically. So,
okay. Thank you.
So remember, you have to have at least $100 worth of each coin to be able to claim. Okay.
Thank you very much.
And in fact, so when you're doing the claim process, there's a link at the end that gives you a download to a PDF that will show you what your claim certificate is, what your origin address is on the blockchain that you want to claim for, and then where you want your Night token sent. And what I've done is actually put those into a spreadsheet, because I had like 9 different wallets, and that was just a surefire way of getting those addresses, so I know where I'm expecting the tokens to turn up when they do come. And that might be worth doing if you've got a lot of blockchains and wallets to work with.
Yeah, one thing, actually, Jonathan, you know what? Something that comes to mind. I was trying to do my claim last night. Is that for those that are not quite used to sometimes functionality of some of the Cardano wallets, is that for the destination address, it must be an unused destination address. So, it's like, for example, in Eternal, the default is that you use kind of one address for everything. So you need to go and untick that, because obviously that one address would have been used before. So you're going to untick that and then use one of the other unused addresses for the destination for the Night tokens to be delivered to.
Exactly. Yeah.
So
And
but
that's one
that's
of
probably
the
best seen when we do the demo. So at least you'll be able to people be able to understand what we mean when we saying that, because I know even for me it wasn't that straightforward. I'm like, oh, what do I need to do
yeah,
now? So I just have to play around with it for a little while before I found what
single address mode.
the toggle to untick,
Yeah, there's some experienced people out there struggling with it as well. So there's,
Yeah,
there's even a stake pool operator who I had to sell. Yeah, had to tell go and in the terminal, you have to switch on single or switch off single address mode, and then it'll work fine for you. But yeah, it's there's a few you have to be in around quite a bit and playing with it regularly to figure out that this most straightforward again is just Lace, because that's the founding team of Midnight are in the same business as run Lace, so they have all the hands on deck. But if you're an internal user or Yoroi, then also that's coming on smoother. There's small modifications going to these other wallets, soft wallets, to get them sorted so they'll work smoothly. But the biggest holdup is the hardware wallet manufacturers themselves. So Ledger and Trezor were informed of this midnight airdrop, 6 months ago, something like that, and told that they needed to have a certain signing method arranged when they interacted with certain wallets. And they've been just slow to react. So yeah, it's one of the prices to pay for interoperability is you do have to make some things more complicated, more flexible, and that adds loads on the user, unfortunately. So there are a few heaps to jump through, possibly if you want to do it slightly out of the main flow. But yeah, it is everything is possible with any wallet, but yeah, might just take a little time to get there.
Yeah, so you're gonna have like a very practical hour next week demonstrating how to do that. And I'm sure that you're gonna have hundreds of questions for those of you that will attempt to do the claim this week. So if you're successful, then well done. This is great. If you're not, then come next week and we'll make sure that to show you exactly what needs to be done, and you see directly on the screen and be able to follow it as obviously the recording is going to be available. So if you don't do it straight away, you can follow step by step later. Okay, let's go and so are there any questions, guys? Anybody that want to ask anything about this? The Exodus, does Exodus wallet qualify? Yes, it will. It will, because that's a that's your own wallet. So it's not like a third party, like like an exchange. So it's just like a difference is not a cold storage wallet, is a hot wallet, but it's still applicable, the same as MetaMask or any of the other browser-based wallets are fine too. As long as you don't have an exchange. So that's the thing where it wouldn't work. If you have your coins on Binance or Coinbase or whatever other exchange you use, then you wouldn't be entitled to the airdrop, unfortunately.
Yeah, and the technical thing behind it is that all those exchanges can actually claim the Midnight tokens themselves. It's just they're unlikely to put in the infrastructure needed to redistribute them out to everyone else. So the Midnight team effectively blacklisted a whole load of different wallets that would just make it untenable. On the plus side, if you're involved in Cardano DeFi and you've got you're providing liquidity on the exchanges or lending it in some of the lending borrowing platforms, then those teams are actually working on claiming the tokens on your behalf and then making them available to you in your wallet, which is a massive unexpected bonus. So MinSwap and Liquid have already come out publicly and said that's what they're going to be willing to do. So yeah, there's lots of ways to get these tokens, even if you're not expecting them. However, one downside, if you're involved in the A starter opportunity that we got going 4 years ago, whenever it was, that treasury wallet that we used, and we've got some ADA reward sitting in there, and the balance was over $100. We can't actually claim with it because it's using a multi-signature wallet, and those native script wallets aren't eligible. So it looks like I've put a question into the team So see if we can twist it around. But yeah, at the moment we can't claim tokens for the treasury.
Maybe they could
yeah.
do like an exception. That would be nice. That would be a nice bonus.
That would be nice, yeah. Or maybe I'll donate some of mine, so we feel like we don't miss out.
What about the ones for the fact token?
The fact token is a pure native token, so
Yeah.
yeah, that's not eligible either. Yeah,
Okay.
has
That's
to be ADA
unfortunate.
itself. Yeah.
Unfortunate. Okay, so if there are no questions, I'll just gonna couple more news to share with you, not necessarily Cardano related, and then yeah, you can feel free to unmute yourselves anytime you like and ask anything. So I haven't prepared because this was the main thing that I really want to talk to about today. So I haven't prepared too much. I've got a couple of things, a couple of relevant news. I don't know if I have taken screenshots, but sorry, where are we? So a couple of things that I've already said in the previous hours, but I'm going to share again. So talking about in terms of economic calendar, okay. So there was, as you know, last week we had the announcement of the US interest rates, and so that was was that Wednesday or Thursday? Wednesday. Okay. And the most important thing, apart from the announcement, that was like kept interest rates the same in the States, but it was the statement. Okay. And during the press release, the Jerome Powell said that kind of the main thing that they're looking at now is the unemployment rate. Because the two double mandate from the Fed is jobs and inflation. Okay. But normally, when you say about the jobs, it's like the health of the jobs market. But in particular, he singled out kind of unemployment. And every week we have numbers about unemployment. And on last Friday, we also had the non-farm employment change. Okay, non-farm employment change, which was kind of the lowest number that they've ever had outside of recession periods. Okay, so the employment market is very weak, and to a point where it would warrant an intervention from the Fed, kind of lowering of interest rates to give the economy a boost. But they are kind of like they are citing the unemployment rate, which remains pretty stable. So as you can see, it went up from 4.1 to 4.2%. But the reason why it stayed so low is not so much that it's the job market is doing well, but it's simply because the number of employable people has gone down because a lot of immigrants have been sent back. Okay, so there is a smaller pot of people looking for work. So obviously the unemployment rate is lower because the number is smaller. And when we look at the numbers of they announced every week, and like the one number was announced yesterday, the continuing jobless claims, you can see that number has been slowly ticking up. At the moment, it's just short of 2 million people. When you look at the the numbers here, the kind of the blue line, this was just last year. That's not what I'm looking at. Got here. So we were at just 1.3 in a couple of years ago. Now we're ticking up towards the 2 million mark, which is an important number. But as I said, the reality is that where are we? I've got these things. Okay, the figure really, if the numbers have stayed the same, the number of people looking for jobs have stayed the same as they were in April, that number would have shot up all the way from 4.2% to 4.9%. So, and that would be something that would worry the Fed. Okay, but they are kind of like, I don't know if artificially looking at the more favorable number because they're still insisting they want to keep inflation below a certain level. Another couple of graphs. So this is kind of the margin of the top 100 companies on the S&P 500, so they're called the S&P 100, and all the following 1500 once you've removed the top 100. And you can see that the top 100 companies are not necessarily American companies with strong presence in the US. They're more like multinational companies. They are present all over the world, and they work in a condition of like monopoly or oligopoly. So there's only a few people that can compete with them, and they can pretty much make their own price. And you can see their margins are kept going up, but the margins of the other 1,500 companies, which are the biggest employers in the US, are kept going down. So they've been squeezed on the margins, and those are the ones that are likely to suffer more from tariffs. Okay, tariffs will hit the American consumers in the pocket again, and have an effect then on the general economy. And if you can see, this is the non-farm payroll, the cyclical adding of jobs on a regular basis. You can see the average is around 2 to 2.5%. Is around this level here. Now, at the moment, we are just hovering above zero. So the kind of job creation is pretty stagnant. So what that could cause in the next few months, it's a period where kind of like equities push down lower, and bond yields are also pushed down lower, increasing. Then obviously the other side of the equation is the bond prices will go up. So if I show you as well what happened last week since since the announcement, when was that? Friday, Thursday, Wednesday. So just in a few days, there's been an increase of about 2% in the yield on the 20-year bond plus. And when you go on to the kind of the younger durations, like the 5 years, 10 years, that's even more obvious. Okay, so that was the price of the bonds, and this is the yield Friday on the so we can see where we were on Tuesday. So that kind of like a drop of 5%. Okay, in percentage term went from 4.4% to 4.25, which basically means almost like actually it went down all the way to 4.17. Almost means that the market has decided that there will be a cut of 25 basis point at the next meeting in September. Okay, and that again, it would probably be the biggest infusion of funds or capital into the American economy in the short term. And so when we go in and look at crypto, and we see, you remember what we were discussing last week? We have been sitting in this range here for 18 days, okay, where prices was really working just in a very narrow range. And I told you on Friday, if we closed beyond below this range, as we did actually on Thursday night, we will probably go and then tap in the next level of demand that was sitting at 112,000. And what did we see? Almost textbook. We touched the 112,000, price went down to 111,920, and then it just pushed back up. Okay, so that is it's not. I'm not bringing that up to say today how brilliant I am, because I am, and I know that. I don't need you to tell me. But it's not that. It's just to tell you that what is relevant is that the price reacted at the first level of demand, and it didn't push any lower. Because as you can see, I have two points there, two levels of demand, the top one and the bottom one. The fact that the price reacted to the first one, it means that the demand is very healthy, because there is a lot of demand there, and we're not looking probably a big drawdown in prices we've seen in previous cycles, because this, even from the top, is not even 10%, 10% retracement. So it's, in Bitcoin terms, it's nothing. Okay, so we're sitting now kind of just barely about 5% from the all-time high. So even after it's like kind of like bad news that were announced last week, and all the Trump announcement of tariffs that caused this drop, the market pretty much shrugged it off and just waited to see, okay, let me wait until it's cheap enough for me to buy and get back in. and I'll do it. So is some of you, is any of you that's actually taking advantage of this? That bought some Bitcoin 112,000? Oh, guys, shame on you. Shame on you. Really. Just listen to these crypto hours, because these are relevant, and it's and especially when you get kind of demand zones, they're obvious on the higher time frames. This is a daily zone. You know, they are generally well respected. You know, at the very least for a bounce. So this zone is $1,500 in size. So you could expect at the very least a $1,500 bounce to take you to 13.5. I mean, in this case, it went all the way in almost to 118, you know, but it's significant. So 1 to 1, 2 to 1, 3 to 1, 3.5 to 1 so far, and it's still going. Okay, it hasn't finished. So these are the things when we talk about kind of like investing and trading. It's not so much how much money do you make out of anything. It's how much money do you make compared to the risk that you're taking. Okay, so in this particular example here, you are taking a risk which is, you know, $1,500, $550 in total. And so you're thinking, so that's the risk that you're taking. And it doesn't matter if you buy a smaller portion, that will be a percentage of that. But then the reward is at the moment 3.5 times what you put in. Okay, so as simple as that. Then if you put in $100, then you know the maximum that you could have taken out at the moment is 350. If you put in a whole Bitcoin, then that would have meant, you know, 112 to 118 would be like almost $6,000. You know, so it really depends on the amount, but it's not the amount that we look at, is the amount of rewards compared to the risk that you're taking. Okay, so in this case, you know, 3 to 1 is pretty good. It means that you can do this thing, you know, 4 times, get 1 wrong and still break even. If you get 1 out of 3 wrong, 1 or 3 right, you know, you make lots of money. Okay, so so the expectation now is that we are now tapping again this place where price, basically what it means when we have a narrow band like this, it means that demand and supply are pretty much at equilibrium. Okay, so but what happens at the moment? The last time we were at this point, price turned around and went down. So you know, it probably there's going to be something like this, kind of like a red day where price goes down, and it will be like a little bit of take a little bit of time to chew up the spare supply that was left when price left this. Because remember, especially if you leverage a drop like this, which is not particularly big, but it's still 5-6% drop, can cause liquidation in some leverage accounts. So that liquidation equals pain. Okay, so that pain is that if you are like a day trader and you're constantly in the market, you know, if you are pain at a certain point and price is approaching that point again, you remember that. And so remember, last time I was there, I actually got hurt. So I make careful I don't get hurt again. See, this is what when people talk about supply and resistance, you know, lines, I will change those names for greed and pain. Okay, so you find you get back to a point where things went well for you and you're greedy. You get back to a point where things were painful for you and you're fearful. Okay, so that's all it is. That's all it is about. So it's normal when you get to a point where there was a sharp drop, that there is some push for price to go down again. When you get to a point where there is like a sharp increase in price, then it's likely, until you've proven otherwise, that again there were people expecting the same thing to happen again. Okay, so doesn't have to be that complicated when you put it like that. It's just like understanding what these squiggles are on the chart and knowing what it means in terms of, you know, decisions that you can take. Now the other big news, and I've only got really a couple of things to look at for you. Okay, one big news is that for the lovers of Ripple. Ripple, let's have a look. No, sorry, go to XRP. Where are the XRP news? Okay. The Ripple and the SEC are finally settled their court case. Okay, so the kind of like has been like something's been hanging on the shoulder of XRP now since 2000, and I can't even remember where it was, but 2020. Okay, so for 5 years there had this court case hanging on their neck. Now the case is finished. Is being settled, and so the immediate effect has been, if you look at Ripple, the immediate effect there you can see yesterday, price went up 12% in 1 day. The moment today is taking a breather because it's a big increase. But it's not just Ripple, because other tokens that do the same thing, like XLM, you can see similar increase in XLM. Although they were not included in the case, so they went up by 11%, and they even, to where they are today, that's 16%. And they were not included in the court case, but they kind of product is a copy of XRP. So if XRP had lost the case, then that would affect their price. And both XRP and XLM now are hovering around the all-time high. I mean, not the all-time high for XRP. For XLM, the all-time high was a little bit higher than about, and was higher in 2021, where they're right about 80 cents. At the moment they're about 50. But XRP is now is close to hitting the all-time high again. They're about 330. The all-time high was a few weeks ago at 366. So we might see a new high shortly, and obviously there is talk about an XRP ETF, which could be appearing soon, together with ETFs of other coins. And we talked about this before. Now that the SEC has changed route with the new administration, they're being a lot more friendly to cryptocurrencies, and so we're likely to see all these ETFs that are in the pipeline being approved at some stage during the last quarter. So XRP is one of them, Litecoin is another, Cardano is another, even Dogecoin is another. I think there is even one for Trump's coin. So the majority of these will eventually find their way onto the stock market, and that would cause again, not necessarily going to have the same amount of capital that Bitcoin and Ethereum have had over the past few months, but still they will open the door to some institutional level investment in these products. And even if it is like a tiny percentage, allocation to some of these products, is still going to push the price higher in the short to medium term. Especially for the long term, this will have a very significant effect. And a couple of things. So let's have a look lately at the ETFs. Bitcoin ETFs. Okay, so Bitcoin ETFs, they had last week, as we saw, we had like a drop. We had a big, almost like 1 billion between Thursday and Friday, and then Monday and Tuesday started again on the negative, and then money started pouring back in. Okay, so we had about 500 million of outflows this week, and at the moment just 350 of inflows. It looks like we don't know what's going to be today, but generally probably the week will end up pretty much even for the Bitcoin ETFs. In terms of Ethereum, similar discussion about Ethereum. So this week is 465 negative on Monday, and then we had 3 positive days. So that's 300, 330. So it's about 130 down. Depending on how we finish today, we might be in the green for the week or in the kind of pretty even again. In terms of the kind of the other couple of things that we're looking at. So this is Bitcoin realized price. And again, when we started looking at that a couple of weeks ago, was 50, just above 50.6, I think it was. The moment is 51.5. So this is the last time that any Bitcoin, the average Bitcoins have moved at all. Okay, and so that's gone up from the beginning of the year, where it was at 41,000. It's now at 51.5. Okay, 51.6. And again, I'll tell you, just to give an idea, this is roughly, we can use that as a proxy for the floor of where the bear market can take us to. And this is going up every week, obviously, because the price at the moment is 116. So any Bitcoin that is exchanged is moved at that price. So then over time, it will push the average price up. And the other thing that we can look at is the the health of the NUPO, net unrealized profit and loss. And again, we are now at kind of 56, still very far away levels where we're gonna have to start worrying, where it's about 70. About 0.7, above 0.75, we are kind of like the greed phase. And at that point, really, we got to start thinking about selling. But at the moment, we're still quite far away from that. So there's nothing to worry about. Okay, so that's it for today. If you have any specific questions, we've got another few minutes. So still time to take a couple of questions. Otherwise, we'll say goodbye and we'll reconvene next week for a master class by Jonathan on how to claim your night token. Anybody has any questions? Jonathan, I've sent you a message on Discord. Just let me know if if you're free later on. I'll give you a couple of times. Free later on to have a chat. We can have otherwise let me know. Let me know how you fix. Can probably do this afternoon as well. Okay, guys. So I will then close the call here. And again, wish you a great weekend, and yeah, let us know if you have any questions, especially for next week. I mean, there's no hurry. So if you have trouble claiming your night tokens, just then wait until next week, and we can sort it then. You got 60 days plus 30, so 90 days to claim your tokens. There's no particular rush. Okay, so have a fantastic weekend, and I will see you all next week. Sorry, before I close, Jonathan, if you please place the link for your session as well. So at the end of this session, Jonathan also conducts a Cardano-based session. So if you are wanting to understand, and Cardano will become more and more relevant going forward. So I think getting yourself familiar with Cardano now could be pay really well, could pay off really well over the following months. So I would highly recommend that you spend a little bit of time with him as well. Okay, so have you got there we are. So that's the link in the chat box. I'll give you a few more seconds to click on the link if you want to attend. Okay, otherwise I will wish you all a fantastic weekend and see you again next week.
Thanks a lot.
Bye, everyone.